Hi guys, it's Ian from OSPFX. It is Monday the 20th of September 2021, 10:27 in the morning in the UK. The US dollar against the Canadian dollar is coming into focus. This looks like a potential Gartley formation on a shorter time frame, and then if we break out to a higher time frame, there's a potential for a large topping pattern. This is what's known as a head and shoulders formation. So we're going to look at the single currency charts to start with. We're going to highlight possible reversal formations, and then we're going to break that down into the US dollar against the Canadian dollar. So let's get to the charts. First chart is the dollar index. We've already talked about this morning. I highlighted that we've got a potential topping formation here at 160.109, and we're seeing a period of congestion, should we say. To the upside, we've got a 261.8% extension level here at 163.82. So although looking at big picture analysis, and this is the daily chart and this is the 8-hour chart, where the bias still looks relatively bullish, there is scope for a downside correction from this level here. If we go to the Canadian dollar, okay, big picture analysis first. Let's go to this chart. This is the 8-hour chart. Okay, this is a potential butterfly formation. So basically trying to catch this CD leg higher. Now what will normally happen is we'll get down to 88.6% and then we'll move to the upside. So I've just highlighted that level there because that's quite important when we get down to a shorter time frame, and we are seeing the Canadian dollar still push lower. Quite strange really. We've got nat gas prices dominating the news at the moment. We're not seeing any follow food buying pressure in oil yet, and I thought that we would do, but obviously Canadian dollar's connected to oil and that's still drifting lower. So this dotted line here, 21.72, being potential support. Now if we go to this time frame, this is 21.72. Remember, we say when we're talking about cipher patterns that you should always target the second cipher, not the first cipher or the second fib level. So the second fib level is here at 21.77. So just moving down to this confluence zone here. So basically, as far as I'm concerned, that should mean that we've got limited selling in the Canadian dollar, and we've got limited buying in the US dollar, which should mean that we should start seeing some sort of topping pattern in dollar CAD, and that's going to be my focus. So just get all these back in line, move me out of the way. Okay, so big picture analysis, and this is very big picture analysis. This is a monthly chart. We're in this potential pattern. Okay, so being in this leg to the downside. So basically this could highlight that any upside rallies in this CD leg should be limited, but while we get down to the roundabout parity, which obviously from current levels would be pretty good, about 2,800 points, but that's big picture. Shorter picture analysis is this, and this is the 8-hour chart. If you've not watched the videos before, the red line is cipher patterns, the black line is bespoke resistance. So here we've got a cipher pattern. Remember we said that normally focus the second fib level, which is at 128.52. I've got bespoke resistance at 128.42. So what I'm looking for a lot of the time is for these lines to be close together basically. So I've got a barrage of resistance to the upside. So this, if it does play out, is a Gartley formation, so 61.8% a retracement in BC, and then up to 78.6 and 127.2, so forming a bearish Gartley. Now obviously when we sort of take a short trade, we need to be looking at the potential for returns. So this is why we have time frame breakdown. So we look at the monthly chart, the weekly chart, the daily chart, etc. And I just want to highlight the daily chart here. This is, as far as I'm concerned, a potential head and shoulders. So left shoulder here, head, right shoulder, and then just coming up to form the right shoulder. Now, the way that you highlight target levels for these formations, and this formation is actually not complete until a break of the neckline, but I always say if you can catch a right shoulder, especially off a Gartley formation with a stop above here and targeting down here, it's much better risk reward than it is trading the break. So what we do to get the target level is we take the length from the head to the neckline, so that's AB, this is BC, and then down in CD, you project it from the neckline down to here. So again, if this plays out, the reward levels around about 120.50 is ample compared to risk. I mean, some people would put the risk up here. I mean, even if you did put risk above the previous swing high, and of course you've got to hold it, you've got to pay your running fees as well. It's still coming in about 6.6 return against investment. Okay, guys, I hope that all makes sense. I'll be back again soon if I see anything else that I'm interested in. Many thanks. Talk to you again. Bye.